on Market Hour.
Only on ET Now.
Presented by Hettich Fittings.
Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines on the show are: the Indian rupee continues to slide in trade despite a record close in the domestic equities and a flat dollar. The food inflation concerns hit the currency that shut shop lower at 61.73. The gold prices trade steady amid choppy trade in most Asian equities and a flat dollar. The prices currently are holding above $1190 per ounce mark. The prices had gained nearly 2% on Friday. And the crude prices continue to crack in trade as Japan, the world's fourth largest crude importer, slips into recession, and as Saudi Arabia reiterates that oil prices should be determined by demand and supply. Let's start with the Indian rupee, though, which has continued to slide in trade today as well. Flat moves on your screens, but we are staring at a one-month lows continuing for the Indian rupee there. And this is despite a record close in the domestic equities, a flat dollar which didn't do much for most of the currencies. The food inflation concerns are still persisting and continue to hit the rupee, which shut shop marginally lower on your screens. Let's get on board then. Vijay Bhamwani, who's author and CEO at BSPL India. Also joining us is Samiran Chakraborty, who's Regional Head and Research India at Standard Chartered Bank. Samiran, hi, good to see you. Let's start with you first. And what's your sense really coming in for the currency? We have seen inflation easing, the IIP numbers are positive, the crude prices are declining. Even then, the rupee really doesn't seem to be taking cue from that.
Well, the fact is that rupee is still a kind of outperformer among the EM space, but there is a generalized dollar strength, which means that from a valuation perspective, rupee is getting overvalued. We have now got the data for October as well, which is showing that about 10% overvaluation, about 5% from its long-term valuation. So clearly, the comfort that the central bank has towards letting the currency appreciate, that comfort is not there if that kind of overvaluation is there with respect to other currencies. So from that perspective, rupee is depreciating very gradually. Our sense is that 61.95 to 62 is a range which will be very, very critical. If rupee breaks out of that, then possibly you could see a significant down move just because of a knee-jerk reaction to this range being broken. But as long as it is within that range, we should be seeing some kind of range-bound movement.
Samiran, I was reading a Goldman Sachs report today which says that they are staring at a 64, 66 kind of levels for the rupee in 2015. Would you agree with them?
Well, it's not our house view that rupee will go all the way down to 64 to 66. We think that the BOP situation is still quite good for India. The trade balance numbers, although they have increased a little bit, still we have enough capital inflows to fund those numbers. And given that inflation is falling on a continuous basis, we do not expect the inflation differential argument to be driving currency significantly lower. So I would say that that kind of a depreciation, which is more than 6% from the current levels, 6 to 8% from current levels, that looks little odd to me if our overall view is correct that inflation will decline in 2015 and growth will be higher in 2015, leading to more capital inflows.
Samiran, what's your thinking on what the RBI really would do going ahead? Because much of the market really seems to be factoring in an interest rate easing going forward. If not December, then Feb for sure.
It's a difficult situation for RBI because bulk of the inflation decline has happened just because of global commodity prices falling. And we know that these global commodity prices can change trajectory any time in 2015. It is not that the overall disinflationary pressure in the economy has been very acute. So from that perspective, RBI would probably want inflation rates to stabilize around the lower levels for a while so that it leads to lower inflation expectations. So from that perspective, we do not expect them to cut in December. or in February. April would be a different ball game. By that time, we will get to know whether this is the new normal for global commodity prices or not. If 75 is what the new normal for oil prices, then yes, there is scope for rate cuts in 2015.
Samiran, what kind of cues would you take in from the global markets? Because it's only US which really seems to be holding up into the international markets. As you were just pointing out, Japan is now in recession. We are looking at more stimulus in China and Eurozone, of course. What kind of cues then would India get from all of these factors?
Well, there are two things happening. One is that there is a divergence of monetary policy across the globe, where US is possibly trying to tighten things a bit, whereas in Europe, Japan, China, there are signs of loosening, which is leading to more liquidity, and that liquidity is likely to come to India, leading to more capital inflows, etc. The other aspect is that if these monetary stimulus measures are successful in Europe, Japan, etc., then you will probably see that 2015 global growth will be higher than 2014 global growth. In that context, if our view is correct on that, then possibly commodity prices in the second half of 2015 might actually go up. So from an export destination perspective, India should do better, but from an inflation perspective, there could be some negative effect from the higher global commodity prices.
What's your sense on what the importers should be doing right now, Samiran, and what's your sense also on the forward premium?
Well, we had seen in between for a while RBI not using the forward premium route for sucking out liquidity from the markets. They were using more the reverse repo operation, the OMO, as well as for once using even the cash management bills to suck out liquidity. But we are now sensing that there's still coming back into that forward intervention route. We've seen that outstanding forward positions have gone up to now more than $8 billion. So that is leading to forward premium staying high, and it's leading to a somewhat of an odd situation where the importer facing a significantly high forward premium has no choice but to keep some of these positions open. We would think that over the medium term it makes sense to cover oneself up whenever the forward premium comes down, because clearly there will be pressure on RBI to use this route in the future as well, because other options of sucking out liquidity might not be permanent.
Final question then to you, Samiran, and what's your sense really coming in for the bonds right now, because there has been a lot of volatile moves into that too?
Well, clearly the foreign investor interest in bonds, both government bonds as well as in corporate bonds, have been extremely strong in 2014, and day by day the interest is growing as inflation numbers are falling, leading to expectation of rate cuts. The market is probably already pricing in somewhere between 50 to 75 basis points of rate cuts. So from that perspective, the December 2nd RBI policy is going to be very critical, where market will reassess this rate cut expectations. If RBI indicates a similar amount of rate cuts, then possibly markets will remain flattish. But if RBI does not indicate a similar rate cut, then I think there could be some negative reaction on the bond market. And we have to also take into account the fact that November, December are very heavy supply months. So once this supply hits, there will be further pressure. And the fiscal side also, one needs to look at the fiscal deficit numbers more closely from now on. It is still a very tight balance that the government will have to run till March end. So if additional supply comes in, that could also be negative. So I think a lot of the good news has already been factored in the bond market. So we have to wait to see whether any bad news really shakes us up.
Vijay, getting you in the conversation also, that's of course all of the fundamentals, but on charts, how is the rupee looking? Because we are holding around those 1 month lows today as well.
Good evening, Manisha. I would maintain my view that the scope for appreciation of the US dollar in the prompt month futures on the currency derivative segment is up to 62, 62.10. Now, as a trader, I might just want to get my feet wet by trying to short the USD INR at between 62, 62.10, keeping a stop at 62.35. and seeing whether the dollar actually goes down. If it doesn't, the probability of the dollar gaining against the rupee might just strengthen because the dollar index is showing signs of strength vis-a-vis the global basket of currencies. But for now, I think 62.10 is a resistance level which the bulls might face some challenge in trying to overcoming the absolute near term.
Vijay, we have seen very interesting moves in the Japanese yen in sense of the Indian markets trading it also. With the Japan now getting into recession, how much more volatility and what kind of prices in the India-Japanese yen would you see here?
Manisha, the yen in the Indian context, that is the JPY INR, unfortunately suffers from liquidity issues. It's the least liquid amongst the currency pairs that are listed on the currency derivative segment in India. And where levels are concerned, I think the volatility is likely to expand rather than contract in the absolute near term. So I would be very surprised if the yen JPY INR went above the 55 odd levels in the absolute near term. And the possibility of 51.50 odd levels cannot be ruled out. The fact that in spite of this kind of volatility, neither the volumes or open interest are expanding significantly tells you that the traders are fairly jittery on the JPY INR. And as long as the volumes and open interest don't really expand significantly from here, I think trying to aggressively trade the yen can be very, very choppy and challenging affair for a trader.
All right, so those are the trading calls in the currency, and of course we gave you the fundamentals as well. Samiran, thank you so much for joining us with your sense on all of that currency markets and of course bonds as well. And with that, let's go for a break. When we come back, we will talk about the commodity space where the gold prices have been trading steady with the kind of gains that they saw on Friday. We will also discuss the gold imports where we have seen a huge jump up for the month of October, almost at the tune of $4 billion. And the crude prices are now still trading below $80 per barrel for the Brent as Japan slips into recession. That puts further pressure.